What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Beyond Meat, the new clean meat startup that went public about a month and a half ago, priced its initial public offering at just $25 per share. Now, as I'm making this episode, trading at about $170 per share, making new all-time highs. The company is valued at over $10 billion. The share price is up at 7x from the IPO in just a month and a half. I cannot ever remember seeing an IPO rise this rapidly. And so in this episode, I wanted to go under the hood, look at the recent quarter. They just reported the Q1 2019 financial results, see how the numbers looked, and then go into the potential that we are looking at a short squeeze here, because shout out to the people who tweeted back at my tweet, but I was looking into the cost to borrow rate of Beyond Meat shares, and I think this is a textbook short squeeze. So I want to cover all of this in this episode. Welcome to Hypercharts World. So you can go to www.hypercharts.co/BYND, and we have all the financial data here for Hypercharts. We also have the stock price. If you go to that, it's up about 12.8% today to 170 per share, $10.2 billion market cap. I mean, the stock has gone straight up since it went public a little over a month ago. But today, I wanted to talk about the financials. So they just reported their Q1 2019 results, first quarter as a public company. Let's take a look at the revenue and zoom in on that just to see what was going on. They reported revenue of $40.2 million. This was over 215% growth from $12.8 million in Q1 2018. So we've seen an explosion in revenue growth, by far a record quarter from Beyond Meat. And even more important than revenue here, what I think is really fascinating is the gross profit. The actual profitability of that revenue is improving dramatically as well. It was just about $2 million in gross profit in Q1 2018 to over $10 million, almost $11 million in gross profit in Q1 2019. So not only is Beyond Meat's top line growing rapidly, but their profitability per unit sold is improving rapidly as well. And these underlying economics is what's getting people so excited. And we can throw in their operating income in the red to see how the profitability of the company is doing. And as you can see, they only lost $5.3 million last quarter versus about $7 million the previous quarter. So their losses are actually staying pretty stable despite this incredible revenue growth. So if we scroll down a little bit, you can see the margins rapidly improving, both gross margin and operating margin there. This is their operating expenses here. I think this is one second on this, because a lot of people have asked, like, isn't R&D a huge part of their operating expenses? Well, if you look, R&D is actually $4.5 million last quarter relative to $11 million for SG&A. So they're spending more money on sales, general, administrative, and marketing than R&D. Although that R&D number is ramping pretty significantly. They're a record quarter with $4.5 million. So that's how they're spending their money. Now let's take a look at the growth chart. This is probably my favorite one. So you can see in blue, we have the revenue growth of the actual business sales, and then red, operating expense growth. So if you see that big gap there, that means we're seeing increasing positive operating leverage in the business. As you can see, Beyond Meat, 215% revenue growth last quarter, up from about 175% the quarter before. So that is the financials we're looking at for Beyond Meat. We have an explosively growing company here with blue in the revenue, explosive gross profit growth, and then losses are being trimmed. But this is where things sort of get crazy for me, because Beyond Meat last quarter, that quarter I just showed you, $40 million in revenue. Sure, that was up over almost a triple from the year before the same period, but $40 million in revenue times 4 annualized is just $160 million. This is a company that's trading at $10.2 billion valuation. So the price sales ratio is what everybody's talking about. They're like, we haven't even seen a software company trade this high. How could Beyond Meat be worth this much? Well, I think the first part of it you have to factor in is the growth. If you're growing so rapidly, that price sales multiple is going to look really, really expensive, but it's compressing at an incredible rate. Beyond Meat is at 160 million revenue run rate now. They're saying they're going to do 210 million plus revenue for the full year. They'll end the year at a much faster or higher revenue rate than that. And so we do have a business that is scaling quickly, but the price sales multiple even just does not make sense to me. Even if you assume that they're going to exit 2019 at a $300 million revenue run rate at a 10 billion valuation, we're still looking at a 33 times price sales ratio. On one hand, I was trying to rationalize this valuation and just think about, does it even make sense? Sure, Beyond Meat is attacking a $1 trillion problem according to their S1 filing of, meat consumption. And I see the vision here. I mean, I'm a huge fan of sustainability. I'm a huge fan of the mission that Beyond Meat has to reduce the environmental impact of the, food ecosystem, of the meat we consume, but still giving consumers an amazing product. I think they're onto something huge here. And there's no doubt that clean meat companies have decades potentially of runway to capture market share from the traditional meat industry industry, and that is a huge runway for growth. That's why the market's so excited about this. That is definitely half the equation. But the flip side is here, this is a business that's not making money. The gross margins are improving rapidly, but they're still about 25 or 30%. We're not talking 80% software gross margins here. So that's one thing. The other thing is you have competitors like Impossible Foods that are extremely well funded, that are also going after that same opportunity. Then you have companies like McDonald's building their own plant-based burger. You have Tyson, the huge factory farming meat behemoth, who's also trying to get into the plant game because they see Beyond Meat is eating their lunch. So I see a huge runway for growth in the industry, but there's a slew of competition coming from Beyond Meat. And that's why personally, I just could not get excited about a valuation for this company. Even I thought when it was at $5 billion, and I've been saying it looks way overpriced since the get-go. So I could keep being wrong, but even at a valuation of $5 billion, I think this is crazy because Beyond Meat, produces their own meat. They're going to have to scale production, actually, factories, input, invest CapEx. It's going to take time to scale this production. So I think Beyond Meat is still 2 years, 3 years away from doing $1 billion in revenue. And I think that we need to get close to that $1 billion in revenue ballpark to start justifying a $10 billion plus valuation. So then I was looking into this, like, how does the stock keep soaring? How does it keep going up? Every time I think it's absurdly priced, it seems to double again. And so I tweeted, and this is why I love Twitter. Shout out to everyone who replied to this. What is the cost to borrow rate for Beyond Meat? And the cost to borrow rate, taking a step back for those who don't know, is, a lot of these hot IPOs attract a lot of short sellers, people who are betting on the company to decline. So when you put on a short position, you're borrowing someone else's shares, selling them on the open market, hoping the stock price goes down so you can buy it back, collect that difference, and profit. So short sellers are betting basically for a stock to go down. Well, to initiate and maintain that short position, you're paying a cost to borrow fee, essentially an interest rate fee to whoever's stock you're borrowing so that you can borrow it for the right to short it. And so this is one of my favorite metrics to determine the likelihood of a short squeeze. And if we're undergoing a short squeeze, is what is that fee? Because if that fee starts spiking, then you start to get to unsustainable territory. Now let's play out some numbers here. So when I Googled when I tweeted this and you guys all replied, I looked at the data and was blown away. The cost to borrow fee for Beyond Meat is over 100%, or it's been around 100% or higher since the IPO. So, it's gone under it a little, over it a little, but let's just call it about 100% annualized to borrow and short this stock. So that means every single week, there's 52 weeks in a year, let's call 1 week 2% of a year, you're paying 2% per week to maintain the short position. So even if the stock does go down 2%, you actually still haven't made any money because you're paying 2% fees. And so this fee pressure means that you don't have much time for your short position to work to make a profit because the fees are eating into your potential gains so rapidly. And so that is a huge pressure for short sellers. The flip side, the other part of short selling that makes it so dangerous and why I will never short sell a company outright, I would only do it with puts, is because you can lose an unlimited amount. That's right, you can lose way more money than you put in. And so if you shorted Beyond Meat at $60 a share because you thought it was crazy, and now it goes to $120 per share, you have to pay twice as much to actually cover it. So you're buying back those shares for double what you paid. You're losing a ton of money, and that's not even including the interest rate that you're paying. So you have this combination of where, they say that fear is more powerful than greed, and fear is what drives short squeezes, not greed. Even though the stock's going up, it's a little counterintuitive because you have people scared that they're losing all their money. So they're getting charged these absurd fees, and the stock is going up, and they could lose an unlimited amount. And so they are basically like, I want to get out of this position. I don't care how much money I lose. I want out to just stop the bleeding. And so what does that force? You have fear forcing irrational buying. And that is, to me, when you have a short squeeze. It's when the company is completely detached from fundamentals. You have buyers who are irrationally buying the stock at any price possible to avoid paying the fees and to avoid keep losing from the short squeeze. And so I think that is exactly what we've seen with Beyond Meat, is that the real driver of the share price has been a short squeeze. We've seen borrow rates at 100%. We've seen the stock doubling every single week. I mean, if you were short, you probably lost your shirt and just wanted to get the hell out of this trade, and you didn't care about at what price, and those are the people who are buying at these prices. So this is my analysis of Beyond Meat. It's not 100% sure that it's only driven by a short squeeze. I mean, the fundamentals of the company are very strong. That's why I was talking about their Q1, but I think to me, this is just a textbook short squeeze where the valuation of the company is incredibly far removed from the fundamentals. So what I think is going to happen here is, Beyond Meat, an really exciting tech company sort of attacking this new industry, I think has a lot of potential. And I think investors, it does deserve a premium because it's how fast it's growing, but we're way too high of a premium right now. And I think the valuation is going to come down to about 5 billion, maybe less, once this short squeeze hype dies down. And so it's going to be really interesting to watch how this unfolds. Right now, like I said, the stock's at 170. Is it going to keep skyrocketing? Who knows? But I think over the long, next month, 3 months, 6 months, it has to come back down to reality. And unless they keep growing at 215% every quarter, I just think there's no way I can get the numbers to add up. So anyway, that wraps up my update on Beyond Meat. Would love to know what you think in the comments below. Do you think this is fundamentals? Is this a short squeeze? But once again, this channel is not financial advice. I'm not a financial advisor. I have no idea what Beyond Meat stock is going to do, but my gut tells me that I think we're looking at a short squeeze and we're just totally removed from the fundamental story. Anyway, this is Hyperchange. Huge shout out to our Patreon supporters, producers, funding the channel. Thank you so much. I'll see you guys next time. Peace.